Now it's time for Hot Picks. We have seen some of those red hot AI names coming off their peaks over the past month. Our guest says this creates an opportunity to buy some of these names at a discount. We are joined on this theme of dips to buy in AI by Ryan Modesto, CEO and Portfolio Manager at i2i Capital Management. Ryan, great to see you. Thanks very much indeed.
Nice to be on. Thanks for having me.
Can we jump in and get to your first name, Nebius? It's a cloud infrastructure provider. You see promise here. Why do you like it?
Yeah. So this is a data center company providing GPU capacity to large AI companies and smaller AI companies as well. We like it. They're built a bit differently. We think they're a data center company that's built with AI in mind from the ground up, where a lot of their competitors are more have like pivoted from Bitcoin mining into the AI data center place. So we kind of like the overall setup of Nebius, and their management team has built really large companies before. They're well entrenched in the tech sector, and we think they're well set up to succeed in this space. You know, the thesis here, though, really, I don't want to oversimplify it, but to keep it simple, it's just exponential revenue growth. I don't know if we've ever seen companies or a company or a group of companies that are growing revenues at the rate that this group is growing their revenues at, and at the scale they're growing it as well. In 2024, they did about $117 million in revenue. In 2026, they're expected to do $2.4 billion in revenue. For annual recurring revenue by the end of 2026, they're expected to do $7 to $9 billion in revenue as well. So large numbers. I guess the argument could be, well, anyone can throw out big numbers like that. How do you know they're going to act on it? But they're signing contracts and kind of back that up. A couple months ago, they signed a deal with Microsoft for $17 billion. And in the recent earnings, they also announced a $3 billion contract with Meta as well. And they said that contract would have been bigger. They just didn't have the capacity to service anymore at that time.
Your next idea is Ouster, and they are involved in sensors that can be used in robotics. Tell us what the attraction is here.
Yeah, so it's a bit of a robotics, a bit of an AI company. They do LiDAR sensors, and everybody, when they think of LiDAR, I think they think of autonomous vehicles. Ouster can do that in the future, but they're really focused on the robotics side of things. So think of automating your warehouse on forklifts, robotic arms, but also drones and things like that. So we think robotics in the next 1 to 3 years is going to kind of have its ChatGPT moment, where everybody kind of says, whoa, these things are going to become real and they're going to be in our houses or wherever. And Ouster has the ability to kind of be the eyes for the robots that allow them to interact and see their environments. They're one of the first companies also to get government approval in the US to deploy their sensors on military. So things like drones, perimeter security, things like that. And their main competitors tend to be cheaper foreign products coming from other like foreign companies. And we think down the road, governments are going to crack down on this because there's real security issues, right? If foreign companies have LiDAR sensors all throughout your country, mapping out your surroundings and your every move, and Ouster's US based. So we think they're going to benefit in the future for their kind of geographic location as well.
That's interesting. So the Americans might be wary of Chinese vision equipment spreading through the country, because the military, I guess, in theory, could be peeking through.
Exactly. Yeah. So always a risk, and just with heightened geopolitical tensions, we think down the road, in the next year or two, there will be some movements on that as well.
And finally, you've got a company for us called nVent Electric. They're an equipment supplier.
Yeah. So this is more of a traditional capital equipment supplier to the data center space, the infrastructure space, doing cooling systems, things like that. And really, we like this company. They're just doing they're in the right place at the right time, and they're doing all the right things as well. So they have the obvious tailwinds with AI trends, data center. You also have the infrastructure onshoring and reshoring tailwinds that are helping them out. They've shifted their business more towards the infrastructure space in the last couple of years, and that's helping them increase their margins. They're growing organically in the mid-teens range. They're growing, when you add on acquisitions, 20% to 30% plus. Their margins are improving. They're buying back shares. They're increasing their dividends. And they're actually trading cheaper than most of their peers as well. They trade about 26 times forward earnings, and most of their peers in the space trade at, probably being generous here, but 30 times earnings or above.
It's amazing. I wonder, people supplying electrical equipment or expert electrical contractors in the States, they must be just swamped with business right now.
Well, I mean, that's a bit of it's a good problem to have, I guess,
Yeah.
but it's a bit of the issue they're saying, right, where demand is far outstripping supply. And like Nebius as an example, they said, we have people lined up at the door trying to get access to data center capacity. It just takes time to build it out, right? And it's supply chain constraints and supply chain issues are really kind of a limiting function right now in the AI space, it seems.
Yeah, I wonder. I'm sure you phone them. They say, "Oh, we might be able to get to you in 2029." Yeah, yeah. It is interesting the way the actual electricity is turning into such a potential roadblock here. Ryan, thank you very much indeed for joining us.
Thank you.
Ryan Modesto, CEO and Portfolio Manager at i2i Capital.